Good morning. Good morning and welcome to the Indy Boomer Show. I'm Mary Pat McKee with Indy Boomer Magazine, and I am sitting here this morning with a couple of folks from Grandview Lending, Kim Irving and Michael Farrell. We are going to talk about reverse mortgage, which I know a lot of people in the audience have questions about, don't understand. I think there's a lot of misconceptions, and I think hopefully we will clear some of that up today. But before we get started, look at what you see on your screen. That is Jim Davis, the man of Garfield. Or did I say that right? He invented Garfield. He writes Garfield, as you all know. He is on our January issue of Indy Boomer Magazine, which you can pick up at any Kroger or Marsh store in Indianapolis and the surrounding areas. Also, we would like to thank Noblesville Trophies, signs, and banners for allowing us to have this show, and we appreciate that very much. So we are able to sit here and talk about reverse mortgage and what it can do for you. So let's jump in. Tell me about Grandview Lending. Tell me a little bit about it, what it is, and that kind of thing.
Well, we're a small company with a group of loan officers, and we not only do reverse mortgages, but we also do traditional forward mortgages.
Right, I thought you did.
For purchases and refinances typically.
Okay.
So I'm proud of the fact that we're able to do reverse mortgages as well, because it enables us to not basically choose a product for a customer. You know what I mean? So we have the ability to basically fit them in the best product possible. So a borrower, a borrower may call and think that they want a reverse mortgage and discover that they're more interested in a traditional mortgage once we sit down and talk to them, or vice versa. They may qualify originally, thought they wanted a traditional mortgage and find out that a reverse mortgage will fit their needs better.
Well, and that's what I know about Grandview is you guys are able to customize what that customer needs. So it's not just a cookie cutter, I want a refi or I want this or that. You're able to sit down, evaluate their needs, and determine what's really the best product.
Yeah,
Mike?
what's really neat, Pat, is that we're a loan broker. So 10 years ago, there's about over 2,000 loan brokers here in the state of Indiana. Now there's only less than 64 brick-and-mortar shops, which gives us that flexibility to look at many different programs and many different lenders to do that. So it really gives us a lot of flexibility. We've been around for 11 years now.
11 years, wow.
And so it's been great to have great staff and people that great products in which to offer our clients.
Right. Well, and I know Kim, for instance, has been in the industry of mortgage.
Yes, I don't even like talking about that. That's like 15, 16 years.
Oh,
You're trying to
you're young. No, you're fine. You're fine. But I mean, it's always good to go, and we discuss this many times on the Indy Boomer Show, to go with somebody with experience that knows what they're doing. I think that's a big asset.
we have a great staff. So I've been in the business since '99.
Okay.
And then our processor's been in it over 30 years.
Wow.
So we have a lot of depth to our experience.
Yeah, and that really makes a huge difference. Now, I know the main focus of today is to kind of get rid of some of those myths about reverse mortgage. Can you give me the differences, or tell me about reverse mortgage? What should we know?
I think the reverse mortgage it's simply a mortgage. Sometimes it gets confused. But it's a home loan that provides people who are 62 and over to utilize their equity in their house for proceeds for various needs. If that could be investing in their grandchildren, if that could be affording medical payments, if that could be just maintaining and keeping their lifestyle. Or
fixing their house.
And fixing their house, exactly.
Right.
Exactly.
Now, what happens when they decide, I mean, I'm probably jumping ahead, but tell me what happens when they are ready to move out of that house if they have a reverse mortgage? How does that scenario work?
Yeah, that's a great question. What they call that is a maturity event.
Okay.
So a maturity event is any time that the loan has to be, so a maturity event is one of the following, is the home gets sold, would be when the last borrowing person has passed away.
Okay.
The home
Does that mean the name on the title?
The name on the title.
Okay.
So the people on the title at the time of the mortgage both have to be 62 and over.
Okay. Okay.
And so at that point, the loan can be refinanced. It could be paid off because all it is really a mortgage.
Right.
It can be refinanced into the family's name.
Okay.
So you don't lose the home. I think that's the biggest misconception, is they feel that the bank has ownership of the title of the property.
Okay.
The bank never has ownership of the title of the property. It's always the borrower.
It still stays in that person's name, and shall I say the homeowner's name.
Correct.
Okay. So, and this is something I don't understand, and I'm guessing because maybe a lot of people don't understand. So when you go in and you get a reverse mortgage, okay, you basically are taking the equity out of that home. Is that correct?
Yes.
And then they give that to you. So when you make your mortgage payments,
You don't make a mortgage payment. You don't.
Okay,
That's what
see,
makes the
there's
reverse
another
mortgage.
conception.
That's what makes the reverse mortgage so neat.
Okay.
Is that at that time you do not make a mortgage payment, so you get to live in that house, and all you're truly responsible for are the taxes and insurance on the property, maintaining the property.
Okay.
And basically that's it. And so you're able to take the money that you would traditionally be using to make a payment on your mortgage, and you're able to use that money to travel or to
Okay.
make repairs on the house and things like that. So that's what makes the reverse mortgage so neat, is it gives the borrower relief, because a lot of times people that are 62 or over, they're on a fixed income.
Right.
And so that allows them to still maintain the life that they've been used to a lot of times, but they're not making that mortgage payment.
Okay. Okay, so help me understand a little more, because because I am a boomer, I've sold, bought and sold a few homes over the years, so I somewhat understand it. Although I never read the fine print of all those papers, they give us. But okay, so say you either sell the home or both of the people on the title have passed away, then how? So do you? Oh, okay, let's just use a $100,000 house. I mean, I know that's probably not a good price, but it's an easy number to work with.
Of course.
Okay, so so you had a $100,000 house. Let's say you had $50,000 worth of equity in it. You take that money out, and you haven't made any more payments on that $50,000 mortgage that you still owed.
Correct.
So when you sell it, what do you owe, or what do you have to sell it for in order to get out of it, I suppose? I can't think of a good word.
That's a great question. So or just kind of even give you the history of the reverse mortgages. It started the first one was back in 1961.
Really, that long ago?
And it wasn't until 1988 that the federal government stepped in and created a law with the FHA.
Okay.
So a reverse mortgage is not any type of subsidy or government program, but they just insure this type of mortgage. They insure the lender, and they insure the borrower. They insure the borrower to make sure that if the lender defaults, they can continue making their payments.
Right.
As they agreed, the lender making the payments to the borrower. What it also helps is when you go to sell the home, if you're upside down in the home, meaning that over time you've accrued more interest than the home is worth.
Right.
That's when the government steps in with their insurance and pays off that difference. So the borrower never owes more than what the home's worth.
Okay.
And that's the real key difference, and that's called a HECM loan.
Okay.
That's the home equity conversion mortgage, and it creates it so the borrower's never upside down in the home. So the question might
Even with the reverse, they're never upside.
never, because of that insurance.
Because traditionally, you could be upside down.
That's correct.
Right.
That's exactly right.
Okay.
So
Another thing that I want to say, though, the example that you gave with the $50,000. So let's say the loan ended up being about $50,000. Once that was paid off, so even if it was paid off in a sale, the heirs would get that additional funds to split amongst them. So that money doesn't go back to the bank.
Okay, but if see, that's the part that confuses me. So so you got a $100,000 house. You take out $50,000 of equity in the home, and then let's say you live in the house for another 20 years or whatever. Do you still only owe $50,000 on that house?
that's a great question. So each and every month, that payment that you would normally pay, your equity's being used to cover that interest.
Okay.
So
see,
each
that's
and
the part
every
I
month,
missed. I'm
that
sorry.
interest.
Okay.
So your mortgage balance does go up as long as you're in there, but you're insured by the government that it will never go up over the value of the home. So if you are in there for 20, 30 years after you do the reverse mortgage, you still have the appreciation of the home, so that still has to be accounted for.
That's true.
But if it gets to a point, depending on what the value of the home is and what you owe, could be that it's just a straight refinance, there's no cash or equity left, or depending on the how much money was taken out or used, or how much the appreciation would, any equity that's left over would be given back to the estate.
Okay, I understand. I keep hearing you say, you got to be 62. What are some of the other requirements, or are there any other requirements besides being 62?
There's a HUD class that you have to take.
A HUD class?
Yes. And you basically, it's a one day class that you have to sit down to just make sure that this is the right product with you. That's
and you understand.
That's outside of our office.
Yeah.
You have to basically do a financial assessment to show that you have the ability to pay your taxes and insurance.
Right.
'Cause we don't want to put you in a situation where you're not able to even maintain the home, even
Right.
after, and you've done a reverse mortgage.
Right.
And then the 62 or over.
And then it has to be a primary home. So it has to be, can't be a rental property.
Oh, sure.
It actually has to be
That
a
makes
primary
sense.
home.
That makes sense. So, I'm going back to the property taxes and the insurance you have to pay on it. So is that typically a once a year lump sum you come up with? I mean, or do they do it? Because I escrow. I always have escrowed because to me, I don't feel it as badly as when the tax man comes and says you owe me $1,300, for
Right.
the year or whatever. How do you set up like an escrow for that, or how's that work?
With that, depending on the lender, usually it's taken care of just as you would normally pay your taxes every 6 months.
Okay, every 6
and then
months.
you can work with your insurance agent to do it on a monthly plan.
Oh yeah, I would think that you could do that. So, do you have to have this person of 62 years? Do they have to have X amount of dollars in the bank to show they can make taxes and insurance for a period of time, or how's that work?
Up to a point. Usually no. Depending on their credit evaluation,
Okay.
there could be a need that they have to have, and it can be taken out of the equity of their property.
Can it?
A
Okay,
little
that
bit
was going to
money-
be my next
A little bit
question.
of money held back for the payment of those taxes and insurance.
Okay.
But a
So-
lot of times the Social Security income should be enough, or whatever type of income they
Oh,
have coming
yeah.
in monthly.
And that's the neat thing. We didn't mention that. This doesn't affect anything with your Social Security, your Medicaid, because it's not income. It's a mortgage.
It's basically a mortgage. It's just a
lot of times
financial
people will use this to bridge that time from 62 to 70 when they're still they still enjoy working. They want to maybe pause the receiving Social Security, because
Right, yeah.
after each year that amount increases.
Correct, yeah.
So this could be a good bridge to go from 62 to 70. Use that money while you're from your home as a reverse mortgage, and then once you become 70, then start receiving the Social Security at that much elevated
Oh
rate.
yeah, and I believe it's 8% a year that Social
Yep.
Security goes up. I mean, you got to make sure you sign up for it, but then each year it goes up 8% of the amount you have worked towards. Let me ask you this, and I just lost it. I had to go. Oh, I know what it was. That was called a boomer moment. But, anyway.
Call it Mary Pat moment.
We have some people in the crowd that make comments when we're talking. But anyway, now you made me forget it again. Oh, I know what it was. Okay, so what is the average age you're finding people do reverse mortgages, or have you do you have an idea? I mean, is it really 62-year-olds or is it more 70-year-olds?
An interesting fact that I just heard the other day: over 10,000 people turn the age of 62 every day.
You mean 65? I think
62.
62.
That's what I was told.
Okay.
Yes.
Well, that makes sense.
But from there's been over 500,000 mortgages that have been done as a reverse mortgage.
Okay.
And the ages really vary.
Is it really? Okay.
Sometimes we have people coming right in, at 62. The older you are, the more equity you can access.
Mm-hmm.
So a 75-year-old can access a lot more equity than a 62-year-old.
And now, why is that?
Because they go on the actuary tables just like an insurance agent.
Okay.
And and they know about approximately what time they would pass away to kind of judge how much equity would be in the home.
Okay, so they're looking at that more than they're looking at maybe 72. They're not working, so they have no income.
Correct.
Yeah.
No, it's
Okay,
based
they're
on
about
that, just
age.
like an insurance agent would.
Based on death. Okay. Well,
We don't use that word.
I know that didn't come out right, but that's interesting because I didn't know that. So it could range all over the board.
Mm-hmm.
Now, when you say 500,000, are you talking across country?
Across the country, of course, yes.
Okay. Now, tell me what I forgot to ask you. I mean, what do people need to know about reverse mortgages that you think is important that we haven't touched on?
I think we've touched on it again, but maybe just to reiterate.
Yeah, sure.
The heirs, they don't lose
That's a
the
big
property.
one. That's a big
It's
one.
always their home. The title's always in their name.
Right.
In the borrower's name.
Okay.
The borrower has to take a HUD counseling class. So there's a third-party class, and it can be online, it can be in person, where they can
Okay.
take it and learn about this mortgage before they actually go into it. So there's a lot of safeguards that the government's put in to make sure they know what it is. So usually it's not just an event that we have with the borrower, but it's with the borrower and their kids in understanding what is their plan. Because sometimes the heirs might say, well, we don't want to do the reverse mortgage. Well, what's your plan B? If you don't want to do that, what's the plan B?
Right.
Many times they don't have a plan B. And then once we explain what the reverse mortgage does, it makes a lot more sense, and they're bought into the value of it.
Right. Again, as we always say, it is very important to talk to an expert. Find out your options. Reverse mortgage might be for you, it might not, but you may have other products that are available to people that they could use to fit their scenario. But I definitely think reverse mortgage is worth checking out. I am so happy that I have another few years before I am 62. But when I am 62, I'm definitely checking it out. I mean, because I think why not?
Yeah.
I don't understand why you wouldn't. At least see it as an option there on the table. So, hey guys, I want to thank you both for being here today. Before we go, I want to remind everybody the magazine is in the Kroger and Marsh stores. Actually, we're also in all of the libraries in Marion and Hamilton counties, so you can pick one up there as well. Also, don't forget Sundays is Boomer TV on Channel 8 on Wish TV at 10:30 on Sunday mornings. And we are so glad you joined us today. Hope this was helpful and useful for you to find out more about reverse mortgage. Thank you, and have a great day.